Okay, so now is it new homeowners? I mentioned you talk about how there are people that are no longer in the field or whatever in the marketplace because they have some great 30-year note at 2.5% or whatever. So are you still encouraging people to lock in rates regardless? Or are you saying wait? Have you adjusted your recommendations based on where we are?
So I actually adjust my recommendations daily. I have platforms that I subscribe to, pay money to, that I monitor the market to the best of my ability. There's people better than me out there. And there's people that this is their daily job, is to strictly monitor interest rates and mortgage rates and where they're going hour by hour. Now, while I like to think I'm an expert like that, I also have to dedicate a lot of time to my clients and making sure their loans get to the finish line on time and they're well taken care of. That being said, I have the equivalent to a stock ticker. Mortgage interest rates daily and suggestions whether to float or lock their interest rate. And then predictions as a whole. When are you closing? Are you closing in the next 3 weeks? Do you have a new build that's closing in May? Because there may be different advice for different clients. A new construction now in May, fingers crossed in our industry, April's supposed to be the big month for a lot of things to come to fruition and positive news coming out, hopefully an end run to kind of the turmoil we're in now, and those numbers will be announced May 10th. So,
and what numbers are you referring to? Just like job reports and inflation
reports? Well, everything.
Reports,
inflation reports, job reports, new construction, durable goods.
Yep.
Multiple factors, just like your industry, affect our industry. And when these announcements come out, while they say we're very, very resilient economy, we're also a very skeptical and nervous economy, where any little bit of news, whether it be good, bad, whether it really has a direct impact or not, will sway the market huge right now.
Absolutely.
And you'll see news come out and rates go up, 0.25% today. Well, 2 days later, they're back down. It wasn't really that big of a deal. So, like I said earlier, with overcompensating, while we may be resilient, we're still scared.
Yeah, right. We're still nervous and uncertain. Is another way of putting it too. So pretty much like under normal times, is your business like 50% refinancing and 50% new home purchases, and now it's all new home because no one's refinancing? Or no?
I would say that is a very, very accurate and normal standard of business. It was probably 70-30 2 years ago when rates were at a low.
Yeah.
And it's probably 95.5 purchase to refinance now. Life-changing events are always something that comes up. We're having children, we're having another child, we're family expansion, divorce. So there are circumstances that are always out there, no matter where rates are at, that are going to trigger refinances, state buyouts, people pass, things like that.